Hey investors, it's Ernie from Shark Investment Research.
Well, it's time to dive back in and take a look at the life insurance industry.
Let's see if Aflac and Globe Life are still in and if anybody else has made their way into the list. Come on, let's dive in.
Okay, well, we are starting out with Aflac, ticker AFL. Their dividend yield is 3.2%. Now, this is as of the 4th of October. Their valid price at that time was $36.41. Now, remember, the insurance industry does not report cash flow per share like the way other companies do. So we're going to just look at the earnings per share and the dividends per share. They are not qualified in earnings per share. They've had 4 hits. So we see 1, 2, 3 down years, a 4th flat year. So not qualified, but they are qualified as a Div 0. So 17 years of increasing dividends per share. No flat years here. Let's take a look at that graphically. So here you can see their earnings per share trending upward over the long term. Here's those negative years in there and some flatness, but otherwise trending up throughout the period. And here was their dividends per share also trending up in a nice reasonable slope. The year-to-year analysis helps us to better understand and clarify that they're not qualified for earnings because they've got these negative bars, but all of their dividend bars are above the 0 line. Okay. The other company in the list is Globe Life. They used to be called Torchmark. Their dividend yield is only 0.9%, so nothing to get real excited about, on a valid price of $79.29. We can see part of what's going on here because they are qualified for their earnings. They're an E0, so 17 years of increasing earnings per share. But that's come at the sacrifice of their dividends, which are not qualified because they had 2 flat years. Now, what's interesting is next year they will be qualified, assuming that they continue their increasing trend on the dividends per share, because this will fall off. All right, let's take a look at that graphically. Here you can see their earnings per share, nice upward trend, always positive. Their dividends per share, they had a couple of flat years as we saw, but otherwise a slower upward trend. And here is the graphical representation of the year-over-year changes, very clearly showing that their earnings per year always in the positive. All right, let's lay them side by side now. Remember, I'm mostly interested in dividends, so I am mostly a dividend investor here. So here we can see Aflac outperforming Globe Life on dividends per share for the long haul. All right, I know it's been a little bit since I've provided some updates, so let me remind you of our categories here. The 3 areas we look at are cash flow, earnings, and dividends per share. In order to be qualified, a company has to achieve at least one of 6 criteria: a CF0, which is increasing cash flow per share for 17 years, a CF1, which is increasing cash flow per share for 17 years, but we allow 1 negative or 1 flat year. Earnings is the same thing. An E0 is increasing earnings per share for 17 years, and an E1 is 17 years of increasing earnings per share with 1 negative or flat year allowed. Dividends are a little bit different. A Div 0 is still increasing dividends per share for 17 years, but a Div 1 is 17 years of increasing dividends per share, and we only allow a flat year, no negative years. All of my data comes from the Value Line Investment Survey, although I do some quality spot checks. If you want to check out the Value Line products, go to www.valueline.com. Quick disclaimer, I am a subscriber to the Value Line Investment Survey, but at this time I am not compensated in any way or have any official affiliate relationship with valueline.com. The October 2nd, 2020 Value Line Investment Survey looked at 10 life insurance companies. Only 2 made the list, Aflac and Global. The others that did not make our list were Genworth Financial, Lincoln National, Manulife Financial, MetLife, Primacare, Prudential Financial, Reinsurance Group of America, and Unum. All right, investors, here's the link to the historical analysis for your comparison, and we will be back at you with the next update.